and welcome to Sectors Up Close. I'm Elena Casas. Our focus today is investing in cannabis, and our guest is Ross Gerber, president of Gerber Kawasaki. Where there's smoke, there's fire, and not many sectors have been as hot as the cannabis sector in the past few months on expectations there will finally be an end to prohibition at the US federal level. Vice President Kamala Harris pledged as much during last year's campaign, and as recently as this month, Senate Majority Leader Chuck Schumer and two other senators said they plan to pass sweeping legislation this year to end prohibition that has stifled investment in the sector, even as it has been legalized in many US states. That has seen pot shares soar. This is only one of several ETFs covering the sector, up 125% since the November election. But investing in the industry is problematic, as focus, like this fund, is almost entirely on Canadian pot producers, to the exclusion of American ones. So what are the risks, and how does an investor approach the sector? For more on this, I'm now joined by Ross Gerber of Gerber Kawasaki. Ross, hi, thanks for joining us. First question, why this sector now?
Well, I mean, you're talking about one of the greatest opportunities. Imagine if you could get into the alcohol business when Prohibition ended in 1933, and you think about the wealthiest companies and families in America and around the world are alcohol families. So here's this great opportunity to get into something that's much less harmful than alcohol, and yet is an industry that's basically been illegal for most of the time. So it's a huge opportunity because people already smoke pot and they want to do it legally. So this is a great opportunity.
But the sector has seen these kinds of gains before, hasn't it? A good example is this stock, Aurora Cannabis. It wasn't that long ago. It was trading at well over $100 in 2018 on a previous wave of optimism sparked by legalization in Canada, before falling to a tiny fraction of that. And that was replicated across the sector. So are we not setting ourselves up for the same again?
Well, no, I kind of look at these industries. When new industries form, you kind of get this first spurt of like the original companies that rise in value like crazy, but then you get all these problems, whether it's growing pains. In this case, in cannabis, you had many bad actors playing in management and unprofessional businesses being run, and then they all got hammered. And now what we're seeing is the reemergence of the best operators and the best companies. So they've survived that first wave of failures. And now what we're seeing are much better run companies, much better capitalized companies with much better strategies. So this is, I think, the real thing now. And I think the first run was sort of like the amateurs run. So we're very excited about this moment because with legalization coming, the synergies and the cost efficiencies will really be huge for these companies, and the opportunity is enormous.
But these US listed shares are all Canadian companies, while the US
Right.
companies can and do only list in Canada. So if legalization is round the corner, shouldn't investors wait until you can just buy stock in a US company?
No, it's exactly the opposite. Because of this weird quirk where these great US companies only trade in Canada, many institutions haven't been able to invest in cannabis companies. And what you want to do is invest in front of the institutions that legally really can't buy them until they're listed in the US. So it's a huge arbitrage. This is kind of the way we're playing it, is by being for individuals that can buy these Canadian stocks. When they list on the NASDAQ, there'll be a huge gain as institutions begin to invest. We saw that today with a company called Green Thumb. An institution bought 100 million worth of stock in Green Thumb today. The stock's rallying. It's one of the first big purchases that we've seen by an institutional investor. So we expect the similar thing that's going on in Bitcoin to be going on with cannabis, with its institutional participation.
So very briefly, how would you recommend someone get into the sector?
Well, I think the easiest way is using an ETF because it gives you broad exposure to the sectors, and it limits a little bit of your risk because each one of these individual companies have a certain amount of risk involved. And the one I like that best represents the exposure we have is an ETF called MSOS. It's a cannabis ETF run by Advisor Shares, and it's really a perfect allocation for U.S. cannabis exposure. MSOS is the symbol.
Thanks so much for that. That was Ross Gerber of Gerber Kawasaki. Well, before I go, here are some of the top stories in the sector. The world's largest pot producer, Canopy Growth, says it expects to turn a profit in the second half of 2022. It cites aggressive cost-cutting and higher demand for cannabis products as it reported a narrower third-quarter loss. Like rivals Aurora and Afria, it's been shutting plants and laying off staff as it pins its hopes on legalization in the US. And last week, Canopy made headlines after it announced a new line of cannabis-infused soft chews for dogs, after a launch of similar products from partner and lifestyle guru Martha Stewart that saw triple-digit sales growth since their launch at the end of January. And Tilray has announced a deal with Grow Pharma to distribute Tilray's medical cannabis products in the United Kingdom. The deal means patients will be able to have access to Tilray products in the UK via prescription. Tilray's shares have more than tripled in value just this year. And that's your roundup of the cannabis sector. I'm Elena Casas, and this is Reuters.